Hi everyone, this is Brien Lundin of Gold Newsletter, and I am speaking to you from the Metals Investor Forum in Vancouver. As everyone knows, the metals prices are soaring, gold is soaring, silver is soaring, the junior mining stocks are soaring. I have the great pleasure to talk to you today about a company that has not quite kept up with the pack, and it represents an incredible value because, as you'll see, the parts add up to a value that's significant multiple of the current market cap. And this story right now is being told to the public. I expect a re-rating very soon. John Florek, President and CEO of Emperor Metals, is going to tell us the story today. John, you have two projects, and let's start with the first, where you're building out a very significant resource, looking at a model that probably wasn't appreciated before, open pitting a resource that includes a lot of high-grade gold, but you've been using AI before AI was cool to direct your drilling and exploration. Can you tell us about that initial project first and how that all comes together?
Absolutely. Basically, Brian, before we even pick up a project, we evaluate using AI, and we did it for both of these projects that we have.
You've been doing it for years, too.
Yeah, I was involved with building the foundational models of using AI in a production setting up at Detour Lake Gold. When we fed those models through, we broke the reconciliation. The amount of gold going through the mill and the same amount of rock being delivered went up by 20%. So Detour went from a mine that wasn't making any money to all of a sudden an extra gold was $1,100 at the time.
Yeah.
It went from $150 million more of extra revenue for life of mine with this new model, and it was a 40-year mine life now, and Eco Eagle has it because shortly after that model was delivered, Cook and Lake took us out. Yeah. And then they added more ounces, and then Eco Eagle saw the generational mine.
And back then at those gold prices, that was a big deal. At today's gold prices, everything's changing. So you're finding gold now that is worth a lot more than what you would have projected even a year ago.
Yeah, absolutely. And so when we picked up Dukane, there was no model on it.
Yeah.
So we leveraged AI to quickly model the deposit. We made a mineralized model and a geological model quite quickly within a month or two. And we saw the opportunity that nobody could see previously.
Tell us about Dukane, where it is, and the environment around it with other mines, other projects, and why this gold is sitting there.
Yeah, absolutely. So we are in the southern Abitibi. We're on the Quebec side. So we're basically, southern Abitibi, Timmins, Kirkland Lake, Val-d'Or, Rouen. Both our projects are in the Rouen camp, if I said that right. So we're there, and that district has produced over 200 million ounces of gold. It's very productive. My estimate, it's going to produce another 200 million ounces of gold, especially with the advent of large-scale open pit mining, like we're now seeing at, we saw Malartic, Detour Lake, now you have Cote Lake, and you have Equinox's Greenstone. So these are big open pit. People didn't realize you can mine these big open pits. So Dukane West is a big open pit that we're trying to develop because, everybody is rushing back to this politically safe jurisdiction for open pit mining. They left, I guess in the 2008, everybody was leaving and they were running to other areas of the world to do open pit mining like Chile and Western Australia or Nevada.
So that's why this project became available?
This project was dormant for 12 years, but there was no coherent model. So we put it together and we saw the opportunity and we sold it to the board and we basically acquired it. We showed how we can add ounces rapidly. So we only did 2023 and 2024, we did the drilling and we increased the size of the deposit from 727,000 ounces to 1.46 million ounces.
At what average grade?
Okay, the average grade, they used lower cutoffs, so it's 1.69. But if you used higher cutoffs, like stuff that, the 1.69 represents a 0.25 cutoff in the open pit and a 1.15 cutoff in the underground. And this was done at $2,300 gold. That's important to realize. Geologists are sometimes stuck in convention and they still look at deposits with an open pit of 0.4 cutoff. Yeah. If you look at our open pit at 0.4 cutoff, we're looking at about 1.5 grams per ton. And if you look at the underground with a 2 gram per ton cutoff, so higher than what the independent did, you're looking at about 4.5 grams to 5 grams per ton. Average grade.
And a $5,000 gold price changes everything. And obviously you're not modeling on that kind of a price, but still much higher gold prices brings a lot more gold into the system or into the economic model.
Absolutely. And if you think about it from a mining perspective and why at $2,300 gold, we had a 0.25 cutoff, you have to think about operations. Like when you don't want to move waste and dump it somewhere, you incur costs. If you could take low grade stuff and make a little bit of money, you're getting paid to move waste instead of incurring a cost to move waste. So this is why we want to go broaden it out, lower the grades, so it's all about profitability. How do you make the most profit?
And one thing that hit me in your presentation in my panel today that I guess I had forgotten or didn't appreciate was the upside potential, exploration potential on trend.
Yes.
So talk to us about that.
Yeah. So right now at Dukane West, we're targeting like 3 to 5 million ounces from 1,000 meters of surface. But adjacent to us, you have First Mining, and then you have Stellar. Combined, there's already 20 million undeveloped ounces. And in the middle of it, they have Agnico Eagle has the whole Holloway mine. My vision is they would potentially, upgrade a mill, upgrade a tailings dam, and then you wouldn't have to build all that infrastructure, and you can have a hub and spoke type to feed this 20 million undeveloped ounces. So if it's not them, it could be somebody else, like an Australian miner comes in. There's a lot of gold sitting around. Gold price is an all-time high. So that this part of the story could be a significant consolidation story. Right? Yeah.
And so that's where you're building resources and eventually to be developed. But you've also got a relatively near-term production story where you saw a mine that had never quite come to production of all the associated, a lot of the associated infrastructure, underground development, and you were able to grab it.
Yeah.
Tell us about that.
Yeah, like Peltier, it kind of stalled because it was a smaller type gold deposit, but it still has a lot of potential to grow the resources. So when we picked it up, we modeled it. We saw the potential to grow the resources. So it's not as small as other people think. In our minds, we could quite quickly double it and then put it on a path to over 1 million plus.
What's the resource right now?
It's 227,000 ounces, all categories, measured, indicated, and inferred. Okay. And
so if you were able to double that, you're talking
400,000 ounces, and we can do that probably quickly. And we have a mining permit in place because it went through a bulk sample and a feasibility study, all that work, and it basically got stalled. A larger entity took out this company. Falconbridge started the underground development initially, and then Alexis picked it up, and they loved it, the deposit. They were putting underground workings in. Gold was $1,000 an ounce then.
Yeah.
And so here we are at $5,000.
It's a lot better project, but it's a lot better project, and you've got a lot more ounces of gold there. You think that you're going to be able to show the market. What's interesting to me is I've roughly looked at those numbers, and correct me if you think I'm wrong, but at near current gold prices and the production level that you could achieve with that project, your annual free cash flow would be some multiple, like 4 to 5 times your current market cap.
Absolutely.
That's amazing. That's the kind of value that in a red hot market like we have right now, investors are going to find that eventually. So how are they going to find it? Through interviews like this?
Absolutely. Marketing because, so even when the gold price has been going up, we're kind of lagging behind. And, I always say, gold, the price of gold, you talked about it. I listen to what you say all the time.
Well, thank you. I appreciate that.
But it's been 2022, 23, 24. The fundamentals said we should have had a higher gold price.
Yeah.
And why wasn't it moving up? Well, it was overlooked. So we're a little bit overlooked right now, but that's okay. 2026 is going to be
catch up as hell, right?
Yeah. Maybe we'll go parabolic. I don't know. Gold just did. So
well, it is a function of realizing your established gold resource is very large and it makes sense, and you've got expansion on that, and you're drilling, and you've got a fairly near-term production story there that can and it's important to understand that if you have a near-term production cycle, or project, you're going to make this cycle, and you're going to take advantage of gold prices. Gold could lose 25%. $4,000 gold is still really good. A lot of money to make.
I'm happy with $3,000 gold.
Yeah,
I can make
yeah.
a lot of money at $3,000 gold, but I'll take 5,000.
Well, John, I am a shareholder. I'm excited about what we're going to see in the months ahead as the market catches up. It's one of the rare bargains in this market. The value's still out there waiting to be picked up.
Yep.
So I urge everyone to take a hard look at Emperor Metals.